Okay, hello, you're welcome again. As we continue studying about smart money concept, in today's lesson we'll be talking more on liquidity manipulations. Not much of a manipulation, but for a clearer understanding of how to spot liquidity. When I mean liquidity, you know, everything in the market is liquidity. Market structure, order block, inducement, any terms you want to use, anything at all, in as much it involves candlesticks, all those things, they are all liquidity. So your job is to know where the liquidity is and how to be able to tag along with it as a retail trader that we are. Okay, so liquidity is just a way of taking money from the market or putting money into the market. So if you are doing market structure, you cannot be 100% right with market structure mapping, all of that. You cannot be 100%. That's what I mean is your market structure cannot always play out. You cannot say you want to take 10 trade and then the full 10 trade will just play out. It may happen, but that is just luck. But in reality, it doesn't work that way. You may have 7/3, 7 winning trade, 3 losing trade, or 3 winning trade, 7 winning trade, all of those. So talking about liquidity manipulations, everything in the market is liquidity. When we talk about order block, this is our structure. We have market. This is how to identify our order block. We know this already. Talk about inducement. You see, after market make a take out of high, and then its low point will now become inducement. We already know that already. Then we have studied all this. Now let's focus on inducement. That is one major thing about how to spot liquidity in the market. So when we talk about inducement, there are two types of inducement in smart money concept structure mapping. The first one is inducement before order block or decision order block. That sometimes market structure will come in this way, whereby after we mark out our structure, market take inducement. After inducement, what happens? We anticipate price to have a break of structure. After break of structure, market give this type of structure. This is inducement. The first order block will be what is our order block or decision order block. And we know what happens when there's two or three other blocks. The first one after inducement is called our decision order block. If you have not known that, you can watch previous videos about that. Then the last place here is extreme order block. Then the other type of inducement we'll be talking about is engineering liquidity. Engineering liquidity, that is the liquidity before the extreme order block. Like I mentioned before, when there is two or three, when there is more than one order block in the market structure, this is full market structure. When there is more than one order block, then we know that after price has taken inducement, the first order block after inducement will be what? Our decision order block. Then the last order block will be what? Our extreme order block. Then the pullback, the valid pullback before that extreme order block, this is going to be known as our engineering liquidity. So engineering liquidity, you can see I marked it as red, and inducement. Those are the two major points to note when marking out market structure, depending on what market gives. Because sometimes market can just give market structure with only one other block. Market can give the market structure with two other block or even three, so on and so forth. Okay, so one most important point we need to note is that price major focus is to take inducement, which serves like fuel for price movement. Okay, when price is making this type of movement, there are many people say, okay, this is order block, they'll just take it like that without waiting for price to create inducement. So this order block now will not serve as inducement. People are trying to buy here, but before you see price will come, take them out, then probably before moving upward again in the buying in a bullish market. Okay, so we as smart money concept trader, we just have to wait to notice and observe what will happen after price has taken out inducement. So there are sometimes price will just come, take out inducement, and then it will just continue to move upward without touching the extreme the additional order block. Price will not go there. Then what if there are sometimes also price will come, take out inducement, touch the additional order block, then continue downward, take out the engineering liquidity, and continue to move upward again without touching our extreme order block. Why? Because extreme order block is secondary target. The major focus of price is either to take out inducement and continue to move, or if it doesn't want to move with this one, it will come down, take out enduring liquidity, continue to move. So people order, there are a lot of order that will be here in the other block, but price will not do anything, it will not get to that point. So for this video not to be long, I will show you just example about this enduring liquidity and inducement, what happened when price gets. So there are some times why I call this manipulation, because there are some times price will just take out inducement, you will look for your entry mode there, entry mode do, all of that to buy along with this market. You will not see them. All you have to do is just to be patient and wait for your turn. Wait until price give you what you can play along with. Okay, so those things, they are manipulations, because price will just come, the order will be here probably to buy an additional other block, and then before you see, price will just take out the inducement and going to move upward. There are sometimes also you see that inducement has failed, additional other block has failed, then price coming to enjoying liquidity, you will not see your entry model there or entry model, you will not see anything there, but you see price will just continue to move upward also. There are some time it will not get to engineering liquidity, it will just use only inducement, or if it doesn't use inducement, it will just use inducement, use the additional other block and continue to move upward. I hope you are getting it. So all these things you just have to understand them, that why that happens is because the major focus of price is to take out inducement, which is the primary target. Inducement can come in, inducement after that, before the additional order block, then you have engineering liquidity also before the last order block. Then we now have the additional and extreme order block. Those two, they are what we call secondary targets. I hope this is very clear. Okay, let me try to find an example to show you what happened with price just taking out inducement, not touching the other block, and price also taking out engineering liquidity, not touching the extreme order block. Okay, not to delay this video, I've already marked out this market structure. You can see what price is doing. Price has given us break of structure, then cause a change of character. You see what price is doing over here. So I was waiting since, let me try to zoom in so you get it clearer. So you see what price did. Price already caused, all these things here, break of structure, then a change of character. After change of character, this is our extreme order block, you can see it. Then this is our engineering liquidity, that's on the 4-hour time frame. So by the time you take a look at this leg, you see that there's no other structure that has formed, no inducement was taken out. So it was in this place, price came, price took out this inducement, then price gave the additional order block. You can see what happened here. Price gave another block, then another block failed, nothing happened, and price was just moving with it like that. All of those things. Okay, so then price came in to this extreme. I was waiting because engineering liquidity is the last inducement before the extreme order block. So this was the 4-hour time frame engineering liquidity, then this was the 4-hour extreme order block. For now, except I'm going to work a formula to be able to catch this type of entry after price has taken out engineering liquidity, because the entry model I have right now is to take entry when price has taken out inducement. If I see my entry, that will go along with it, but I've not actually tried on any entry model using engineering liquidity. So since I don't have that yet, this structure, I waited for it, and then what price did, see what price did. Price just came, took the engineering liquidity, never tapped on the extreme order block, because this was what where I was waiting for my entry model. Price just took out the 4-hour engineering liquidity, and before you see, this is boom, price took out, the trade just played out. Okay, let me put this plug here so you see how many pips, how many return on investment I would have made if I had seen my entry model or entered this trade. This is, you can see I would have made 10 RRO. So if I raised $10, I would have made $100 on this trade. With $100, I would have made $1,000 just on this trade alone. So these are type of the manipulations that can happen, that your order block is secondary, being it extreme order block or additional block, they are secondary, but the inducement that will happen like in this one that will happen here is primary, and then this general liquidity too, they are primary. Those are the major targets of what price just want to do. I hope this is very, very understandable. So all you have to do is to always map out the chart, practice, understand, and then you can be able to make money with this information. I hope this is very, very, very helpful. I wish you the best of luck and have a great time. Okay.